You brought up an interesting point because you said there's only 21 million Bitcoin available to be mined. So first of all, there really is no such thing as debasement because you can't debase the fiat currency. Inflation reduces the purchasing power of currency, but you can't debase it. We can remove a little bit of the paper from a dollar bill, but it'll still buy a dollar's worth of goods. I can debase gold, right? I can take an ounce of gold out of a bar and it will be worth less. So that is debasement. But you can't really do that with fiat currency. And so the issue with Bitcoin is like, well, there's a fixed supply. I can't print any more of it. But there's infinite fractionalization because I can fractionalize Bitcoin to an infinite degree. So I can keep literally fractionalizing the 21 million Bitcoin into infinity as long as there's demand for it. So how is that actually different than just printing more money?
We'll use the Michael Saylor example. Let's say he's got 2.1 million Bitcoin. He's got his 10% slice of the pie. That's what he's got. You can fractionalize the Bitcoin. Smallest fraction of a Bitcoin is called a sat, a Satoshi. It's 8 decimal places out, 2,000 sats per dollar right now.
Right.
So you can fractionalize it and he can fractionalize it and he still has his same slice of the pie. The problem with the fiat world is when the inflation occurs, it's not evenly distributed. It wouldn't be a problem with inflation if every time they printed money, if they added 10% to the supply of dollars, then my bank account all of a sudden got 10% more dollars and everybody's bank account got 10% more dollars. Great. The inflation was evenly distributed. More was created, was spread around evenly. And so no problem.
That's actually exactly what happens because all money is lent into existence. So if the government is going to create money, they have to basically sell bonds into the market. They create money through lending. In turn, banks loan money in the world. So when the government issues debt to pay for excess spending, that money winds up into the bank accounts of corporations, households, etc. So there is a accounting equation that exactly matches exactly what you just said, which is that inflation in that form is equally distributed because when the government creates money through issuing of debt, it winds up on the balance sheets of households.
It can wind up on the balance sheet of households, You're right, but it takes a bunch of steps. The U.S. government can borrow at the treasury rate, but for me, when I want to borrow to buy a car, I got to pay 10%. And so the further out the curve you go, the more I have to pay to get access to that new money. And so what happens is it enriches the people closest to the money spigot. By the time it gets down to the guys out in the oil field or the ranchers or the farmers, it's taken 15 hops and they are much more disadvantaged in terms of getting access to that than Jerome Powell at the Fed or people in the Treasury who are borrowing.
Catch me daily on The Real Investment Show. The link is in the description.